weak to strong hand transfer, and if it's occurring, and if it is occurring, how it's occurring in terms of structure. And it's all there. You don't need a bunch of other colorful words to characterize what's going on, right? It's all there for you. Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility. Hey, how's it going, guys? Welcome back to mentfx, and in this video, we are going to be taking an in-depth look at this week currently and line it up with what I've been telling you guys and kind of teaching you guys in the last two videos where we dealt with the session sauce and the very in-depth 2022 trading strategy where you utilize your understanding of sessions and time to trade on the pairs that you want during the time that you want, and allowing to the market to basically work for you so you can actually jump on when you want to and be able to trade. Now, for a quick rundown, if you haven't seen those, if you are someone that wants to trade during Asian session or does not have the ability to trade during, let's say, London or New York or the overlap of the two, then what you can do is you can go ahead and trade that Asian session, but you shouldn't be doing it on the wrong pairs. The Asian session is going to find the biggest volatility and liquidity and movement in the market during pairs that have the yen associated with it, or other countries whose pairs resemble or are associated with the time zone that the Asian session normally exists during. So just like during the Asian session, the euro and the dollar, aka Europe and America, are usually, sleeping, watching TV, watching Netflix. During that time, all the Asian time zones and all the Asian countries, or New Zealand dollar even, are the countries that are waking up and ready to take themselves onto the market and begin to input orders just like anybody during the European or the American session would. And you can see right here, once again, we have our lines delineating our 2 days, and we're going to go in depth on this right here and talk about a little bit something in a second, right? You need to go check out the previous video if you haven't seen it yet. That went very in depth on sessions, so that'll help you a lot before you watch this video. Otherwise, if you've already seen it, then let's get into this. So as you know, we have these lines here. I'm going to make them black once again for you guys so you can see them easily. So far, it is Tuesday. And again, this is going to be released a little later, just like the one from yesterday, recorded yesterday, is going to be released a little later too. And as you remember, yesterday, I showed you guys the webinar in the private mentorship where I spoke about being long from this point here. And we came out with this over a month ago in the mentorship, telling everyone that we were aiming for this liquidity, and that since then, all we've been doing is looking for those bullish plays and ways to position ourselves bullish to come and run this high, and then potentially to continue running higher into those higher time frame liquidity points and structural deliveries. Right now, as a result, we've had that deliver perfectly to the top side. When I recorded the video yesterday, the price was around here, and even in that video, so make sure you check it out, I said we are going to come and take this high. We are still bullish. There's no reason to shift our bullish bias, and we're probably going to come and take that high, and as a result, I'll be looking for buys during the session. Lo and behold, yesterday's session was absolutely beautiful. Coming into that session started right here. You can see the same things present. During the London and New York session, for the most part, we found a large consolidation range, or the inability of price to choose a given direction, as it built up anticipation and created weak-minded anticipatory traders before the real money came in to liquidate the weak hands and to be transferred into the hands of the smart money or the strong hands that are then able to accumulate more of those positions and take them on their given path, which was, of course, this high. Now, sadly, I actually wanted to manage this specific trade right here. This was my trade. I actually had one more loss in here, which we'll look over in a second. But I actually wanted to manage this specific trade at a partial here and allow the rest to run, because I knew we'd have a really strong run up if we were to come and deliver to this daily. Because remember, if there's liquidity above that daily point, which we've been saying there was forever now, and you can see the previous video where I even showed you the private webinar in my mentorship where I went over this. Come and deliver to that. So if we know there's liquidity there, what does that mean? Does it mean that price is more likely to come and tap this area and then continue going short? Or does it make more sense for price to come and really run whatever liquidity is above there before it decides whether or not it wants to reaccumulate or continue pumping? And the answer is almost always going to be this right here. Because if there is a pool of retail liquidity resting there, or dumb money liquidity resting there, or anyone that was viewing this as a head and shoulders or resistance, right? Because retail on the basis was looking at this as a huge resistance, right? They saw the huge run up, and there has to be a reversal in their mind. And as a result, you know, whether they're looking at this line here as resistance, right? This is their resistance. Maybe this is their resistance. Maybe even this is their resistance. Whichever one they were looking at, all of these wicks inside of these areas look like rejection to them on lower time frames. And as a result, that was my phone, shit. And as a result, a lot of people are going to be selling in hard, and most stop losses are going to be placed just above or further above this last liquidity point, whether it be in the form of an ATR or an indicator or anything like that. So at the end of the day, what we need to understand is that, you know, this entire run here was that run on retail liquidity. And all we had to do was approach it from a 3-box methodology standpoint to know that it was going to happen. We didn't have to know that retail is looking at this as all as resistance. We didn't need to know about the channels that they're looking at the head and shoulders they're looking at. None of that matters. At the double top they might be seeing, right, at the rejection candles, at the dojis they're seeing, at the shooting stars, whatever it is that they're doing, it doesn't really matter, right? What matters is that we understand from a basis of protected highs and protected lows, and a basis of the 3-box methodology delivery, and a basis of Wyckoff accumulations and continuations to liquidity points or markups continuing to occur. We know that that next draw on liquidity or the next draw on price on these higher time frames is going to be that high. And as a result, we know that most candles on the way up into that are going to be bullish candles, or in this case, gray or white candles, then they are going to be down candles or black candles, right? So that means that if we have that bullish prerogative and we have that bullish mindset, even if we're scalping, we can allow that to be partnered up with that higher time frame to create some immense risk to reward ratios, some immense and really high potential trades, and give us the ability and the chance to still manage those trades in a way that if we're wrong, we can still be right and still make money. And once again, that is the absolute beauty of trading smart money and understanding smart money. And just before we go into these specific trades right here, so I'm going to show you really quickly, you can see these beautiful trades. And again, you can see these trades came in at the at the 7 p.m. until 1 a.m. mark, which is considered Asian session, aka what other traders consider as an untradeable session, which is complete bullshit. As we all understand, there is a lack of proper education in this industry. So do your own research and view the charts for yourself, because it's all there for you. Now, to quickly talk on this, if we look at the mentorship yesterday, we were catching this up. Beautiful trade. You can see I had that liquidity still placed there at that daily high, right? But if we just go through it, you can see we had someone else in the UJ with a little bit of a smaller stop loss. We had this guy that caught the UJ with me, literally from the exact same area. So really nice trade there. I think he had a little bit of a bigger stop loss because he was using one of the other entry criteria, which is fine. Trading is a rule-based system for yourself, not something you copy from anyone else, even if you have the same idea and bias. At that same time, very quickly, notice this huge red or down push or black down push right here that you see right here. What we also had at the same time was people that were able to take advantage of the fact that, where was it? Maybe it was above. Let me just make sure. And also, if you want to join up, the link is in the description, so definitely check that out. But I need to find this if I can. It'd be such a good thing and such a cool thing to show you guys. This is actually my first entry. That was a loss. I'll show you this loss in just a second as well. But yeah, we have this right here, right? So you have that down push before that big up push. And we had members trading that on the 1 second time frame, doing the exact same things, using the exact same entry criteria. Now, again, they're less probable, and they're going to be they're definitely going to run less RR, because what you're looking for is that down push in a very, very bullish market. And even though down pushes happen in bullish markets, right, as you know, I actually had a sell on the first day, right? I had a sell back here, and this sell ran, I think, over 1 to 20. Oh no, this one was the fastest 1 to 40 I had, but I had the stop loss a little bit higher on the back end. So it was a little bit under 1 to 40, and again, of course, we had partials on the way, so it doesn't actually work out to being 1 to 40, but there are still sell scenarios that can present themselves, and they can be scalped and they can be held in the case that they wanted to make deeper pullbacks into larger 3-box methodology points, such as deeper supply zones like this, or even higher time frame deeper supply zones, which would mean we'd be attacking, for instance, the liquidity that rested below here. You know, lo and behold, that only happened a little bit later, so we weren't able to position in that sell perfectly, right? This sell could have been the one that ran and made this low, and that, of course, could have been 1 to 150, but It's not about what it could have been, it's about what it was. So that fastest 1 to 40 for me was beautiful, and I enjoyed it. It was great. Coming into the Tuesday where we still had that bullish bias, and that bullish bias was actually being delivered on that lower time frame structure. And as a result, we were able to position ourselves very nicely. A lot of people in the mentorship were able to position themselves on this as well. And once again, this all happened during the Asian session, a session that a lot of people tell you is untradeable, can't be traded, doesn't have enough volatility, doesn't have enough liquidity, blah, 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 blah. All this useless shit that you don't need to hear, right? What you need to understand is that the Asian session is going to have the most volatility and the most liquidity and the same movements that you're going to see on any other pair, on the Asian related pairs, or on the pairs that have currencies in them that are related to the time zones that Asian sessions normally trade during, which is oftentimes going to be like the New Zealand dollar and the yen, right? Those are going to have those large movements. And once again, this 7 p.m. until 1 a.m. had very large movements. And once again, when we came into London, it also had large movements, right? But that movement was still sustained from the start of that UJ session, right? And most of the consolidation, quote unquote, that occurred, or most of the illiquidity in the market that did occur, was actually during the New York session. Similarly, as it's 11 a.m. right here, so I'm actually on New York time, this is probably going to find itself consolidating once again until we come into the next Asian session, in which case we will then again write out our bias for the day and begin to trade based on what you want to be trading. Since I trade Asian session, I only start looking at the actual charts and analyzing everything just before that 7 p.m. mark, because that's when I like to jump on the charts now. I do a lot of Asian session stuff. It allows me to spend the day with you guys, advertising, mentfunding, Instagram, all the fun stuff. And if you haven't followed me on Instagram, make sure you do. I have a lot of announcements coming out there soon. So definitely check that out. But now what's beautiful is notice this large move that you could have been a part of, right? And there's tons of 3-box methodologies in here that once again, you have the opportunity to get involved in, right? Just like I spoke about in the previous video, as smart money gets involved and smart money interest is getting involved, that smart money interest is going to create these 1, 2, or 3 at max criteria that allow for them to accumulate a little bit more positions, or actually kind of large positions, before the real run occurs. And that's exactly what's happening here. We have that long consolidation because it's during a session that's more illiquid respective to the UJ pair. Again, this is, remember, New York session. And then as UJ comes around, sorry, not UJ, what the fuck am I talking about? As Asia comes around, the yen pairs, like UJ, is going to experience that jolt in volatility, that addition of volume, that addition of liquidity, right? This is why I don't really believe in looking at the actual volume. You know it's happening, right? There were studies back in the day when they didn't have access to candlestick charts because it wasn't invented, where you'd use volume and stuff. But now you can see that exact same volume in the candles themselves. And if you know what you're looking for and you know why you're looking at it or when you're looking at it, you know exactly what's going on there and how certain moves are showing you certain things in respect to Wyckoff and accumulation, in respect to volume coming into the market, in respect to liquidity runs and when they want to occur. It's all there for you. You just need to take the time to study it, right? And you can either do that with the private mentorship or you can do that on your own. You don't need me to do it. You can use all these free videos to do it yourself. It's all available here. Now, of course, there's much more depth and better concepts and cluster criteria that and actual other entry criteria taught in the mentorship, but you don't need it. Make sure you utilize the free stuff if that's something that you can't afford, for instance, right? Now, I want you to quickly remember this little play-by-play right here that happened during this Asian session, right? Remember how there was this large consolidation, large smart money interest coming in, pushing the price higher. As they push price higher, the accumulations on lower time frames within nice 3-box methodology setups and the full release to the top side, right? Just remember that setup really quickly. And now what I'm going to show you is, let's say you're someone that actually can't trade the Asian session, or for lack of a better word, let's say you're someone that can actually trade during London or New York. Well, now let's say and look at EU. Now the reason I'm doing this is because I already saw this and it was perfect, so I want to show you guys this. But now if we go to EU, what do you see? Well, the beauty of this now is that, again, we go back to just around when Asia was happening, right? And that's in or around, we have until about 1 a.m., which was around here, right? So this was around Asia. Notice what you see again, right? You have, during that same Asian insane push, this is that Asian push right here. During this Asian push that you had during that session and then that continuation to the next, that was absolutely beautiful. on an EU pair that doesn't have the yen as part of it, during that same session, you have the tiniest little movements. This is already a 5-minute. The tiniest little movements with nothing happening, right? Big pushes down, huge moves back up. As what rolls around? London. As London rolls around, once again, we have that impact, that volatility being brought into the market and moving price. And what's interesting about that? Well, as we come around to, once again, the New York session, which was in or around here, what do you see? The same thing occurs. That weak to strong hand transfer begins to put in those higher prices. Those higher prices begin to hold at their demand levels, at their demand zones, at their beautiful mitigations of that demand, with whatever it is you want to call it. Inducement or whatever. You don't need any of those words. You don't need any of that marketing side of things. What you just need to think about is weak to strong hand transfer, and if it's occurring, and if it is occurring, how it's occurring in terms of structure. And it's all there. You don't need a bunch of other colorful words to characterize what's going on, right? It's all there for you. You have that move to the top side, that mitigation of those zones, the continuation even higher, the remitigation of those last zones, and once again, the insane takeoff during what? Well, you can see this is around 11 a.m., this is around 9 a.m., so this whole move, once again, happened during the New York session, right? So what's interesting about this is that this exact same move, now recognize it, is the exact same one that happened on UJ, right? If we go to the left here, there it is, right? But what's interesting is that they both happened at those two different times. The Asian session provided you the exact same setup criteria with the same higher time frame bias and delivered to it beautifully during the Asian session, because we assume that during the Asian session, on a yen pair or an Asian session associated pair is going to have all that movement. Similarly, if we go to EU now, that same movement, instead of happening during the Asian session where nothing really happened and it was kind of stagnant, occurred beautifully, and the volatility and the liquidity and the lower time frame moves that were perfect came into the market during the American session. Why during the American session? Because Euro US dollar is associated with the pairs that are associated with that time zone and that pair, right? I got confused there a little bit, but either way, it's associated with that actual time zone. So as a result, the American session is going to see that high end movement. Now, of course, this is broken down much more in depth in the mentorship, and the reasoning and the actual ways of being able to get involved in these areas here and viewing them properly is, of course, in the mentorship too. But you can go and study this on a basis of what you know from my free YouTube channel, and you're going to be able to see a lot of the same things I teach you, right? 3-box methodology on the way down begins to make that move up. 3-box methodology, you have an SND point, you have the Wyckoff inside, you have the break higher, you have, once again, 3-box methodology with a 3-box inside with an SND that gets mitigated with the confirmation to go long. I'm not going to draw them all out right now. If you don't know what I'm talking about right now, and you're new to my channel, definitely start at the very start and just work your way up. It's a long one. If you don't want to do that, there's a private structured course mentorship in the link below, and you can see it at the bottom of my screen. And otherwise, if you know how to do this all and you've already found profitability, as a lot of you have, and you have actually messaged me, told me all about it, and actually have gotten funded, consider getting funded with mentfunding, because why not? And I'd love to get you guys on for an interview in the future so we can talk about your own journey, your psychology, how you develop the trading plan, because I saw a lot of people want to learn about that. But lo and behold, the main thing I want you to take out of this video, and as the days progress, you're seeing this happen literally in this week, and you saw in the previous video how I literally outlined a month before, that we were going to be going long from here. And since then, we've been going long. And since then, I made the video where we were still long. And since then, with that long principle in mind, we were able to catch these huge moves, the ones that actually delivered to the top side and delivered to nice liquidity points during sessions that a lot of people wouldn't actually teach you to trade during, or tell you that you can't trade during. Right? What I want you to do and take away from this is that the same movements that you're going to see during these New York and London sessions that are much more volatile and liquid, as people teach you, you're going to see the exact same things on yen associated pairs during the Asian session. If you don't believe me, go and jump onto the charts and look at it yourself. It's all there for you. You can see that move even happening here. You can see the mentorship students catching this, right? The reason I talk about my mentorship so much and show you little snippets of it One is to, of course, incentivize you to potentially join, but two, and most importantly, is that I want you all to understand that there are students and there are members and there are funded people, funded members that only and have decided to only trade the Asian sessions, including me, which means you can now recognize that it's not about, not having enough time to be on the charts or not being able to fit trading into your work schedule or not being able to spend 12 hours or 15 hours on the charts. You don't need to do that, right? I spend about, at max, I spend from 7 p.m. until 12 to 1 a.m. So 7, 8, 9, 10, 11, 12. So I spend about 5 hours, but usually it works out to being about 2 or 3 because oftentimes the Asian session provides me a setup within the start and the rest of it is just managing and I can walk away from my computer or I just don't trade the session at all, right? There are times where I just can't get in and I just don't use anything. But that said, you need to recognize that, it's not so much that the time just doesn't work out for you or the fact that you have a job means you can't trade, because most of that is bullshit, especially if you have a job and stuff and you're not trading live yet. You should be learning anyway and you should be journaling. So I suggest that. And of course, if you're in the mentorship, don't forget about the hashtag the process section, as we outline literally a journal you can use, how to fill out the journal, how to actually utilize that journal, and a lot of other stuff. So if you want to take your own knowledge to the next level, check that out. Otherwise, I hope this video helped you in understanding how to utilize sessions and how to view sessions from a standpoint of, it's not really about that it's Asia's like bad and then these are good, or it's not like Asia's the consolidation and then everything runs the liquidity ranges of that. I think it's a different way to teach, and I'm sure some smart money people can teach that and do well doing it. But if you want to really understand the reasoning for why this movement happens and how you can trade any session, any pair, in any time frame, because remember, time frames, you can trade all time frames, but without a proper understanding, it's hard to get involved on all time frames. Well, then you can approach it from this standpoint, and you can approach it from the standpoint of understanding that you can get some insanely good moves using just even the 3-box methodology I teach you guys on the YouTube channel during these sessions, and just go and test it. I don't need you to believe me. I don't need you to join my private stuff, my paid stuff. I just need you to go and jump on a chart and view these things in motion and study them, right? Give yourself a month or 2 months just studying one element of it, and you're going to be confused and surprised by the type of trader you are, a month and 2 months from now. So it's the 4th of January right now. I know this will be released a little bit after that, but that said, you guys have seen basically so far this week for the last 2 days how we came into the market with a bias of going long, how we came into the market of being long in the webinar. In the previous video, I showed you that too from the private mentorship, how we came into that. And if you're in the private mentorship, we've been long since price tapped into this S&D zone. And since that demand mitigation and the break of like this first 4 hour or 1 hour 3-box methodology or 3-box zone, we've had the beautiful bullish delivery. And as a result, you've had the same thing happen during the EU session. And that delivery of price that happens on a much higher level and delivers to the points you've been watching or to the supply and demand zones and gives you the mitigations you've been looking for occurs during, and oftentimes, not always, but during the corresponding sessions to the pair you are trading. So again, let this video be proof to you and almost like a release, an independent release of knowing that you can be independent in the markets during whatever time you want, during whatever time frames you want, with a proper understanding of when shit gets serious on the given pair that you're trading. And you're going to be confused and surprised by how far you can take yourself just by implementing this in your trading, whether you're a retail trader or smart money trader, whether you're in my private mentorship, my non-private mentorship, or my free mentorship on YouTube, of course, or if you're even part of another smart money gurus group, whatever. If you are, try utilizing this understanding with the things you've been taught there, and you will be surprised how much better your hit rate, your understanding, and your overall application of the concepts are going to become. So once again, thank you so much for watching. I appreciate you all so much. Thank you for the immense support. I have some insane stuff planned for you guys as we come into this 2022. It's still only a start, so I gotta figure out how I want to get that out. Make sure you follow me on Instagram for very important and really crazy updates. Message me anytime. I try to get back to everyone, but the mentorship's always a priority, and I'm always active in there, much less on Instagram. But other than that, I appreciate you all so much. Don't get scammed by the people on Telegram, and follow me on Instagram. And subscribe if you want, if you enjoyed it. Leave a dislike if you hated it, and let me know why, so I can improve my videos over time. And if you liked it, please let me know. Leave a comment. I try to respond to all comments. I appreciate you all so much, and mwah. Peace, guys.